congratulations to you, first of all, Tommy, on the new addition to your family.
Thank you so much, man. I really appreciate it. As I say, nothing like new life, exciting times, man. Everybody's doing great. Everybody's healthy, and I appreciate the well wishes, man, for sure.
Well, you can see how grateful and happy you are. That's for sure. You're glowing.
Thank you, man. Thank you. I can't hide it, right? Nothing.
Right.
For sure.
So anyhow, let's talk about the market. So since we talked 2 weeks ago, right? We had our follow through. Remember when we last talked, we had a little direction as far as that being a dollar bull. And Friday, we finally hit our targets for multiple currency crosses, and we obviously had a big reversal. Now, I would be careful for any one of your followers out there that are becoming perhaps dollar bears. I think remember we've been talking about the British pound for a long time? So,
yes.
Okay, well, it's a commodity-driven trade what's going on right now, and you can see how that really is, the divergence is playing off in the market. So if you look at the dollar index, and you really look at the basket of currencies that's out there, it's the euro and the pound with their major moves over the past few sessions, especially from Friday into today, that are driving the index lower, okay? The other ones aren't necessarily hammering the dollar, okay? So now you look at the price of oil. We're hovering just below $60 a barrel, and we know we're going to $100 a barrel in oil within the next 6 to 12 months. It's just not, it's not going to not happen, that's for sure.
Okay.
So, and that means that besides that, that's going to cause inflation. We already know the CRB is already going up inflation. Corn's up, wheat's up. I mean, every physical commodity that's used as far as consumption right now is definitely appreciating in price globally, okay? So that's what's also going to help to contract certain currencies versus the dollar or expand them versus the dollar. So remember I told you how Australia and the New Zealand dollar, those are going to be very neutral, even though they're a little bit bearish right now, but the commodity part is holding them up. And you can see how they're kind of more neutral. They're not really bullish right now. It's the pound that's driving the dollar index right now. And that's an oil-driven trade. It has to do with the fact that British Petroleum is so huge, and they also influence a lot of other parts around the globe because of that. So that's giving a lot of support to the pound. But the euro, if you notice, it's coming off a high that it made a couple weeks ago, and then we had this nice little dollar rally. Now it's coming back again, but not in a strong way, not like the pound. The pound keeps on making higher move trend highs, okay? The euro-US dollar hasn't done that. It's not running at that kind of capacity. So the dollar index really is coming from the pound, basically, from as far as where its direction is looking. So you can't use that as a total indicator for most of the currencies. So, but I think the pound, without a doubt, as long as oil keeps on railing, and the EU, you got to realize Germany has to flip the bill for a failing Italy, and now Spain and Greece also are coming back into the picture. So I think that you're going to see a lot of strength and weakness in the dollar, but it's going to be really definitely divergent across the board. And watch oil.
Man, we're going to have to clip this segment, I think, folks, to our producers and get that up on our website and our YouTube channel, because that was a great summation, man, across the board of everything. Yeah, the pound, the euro, I've been out of the office a little bit, Teddy, as you know. I've been keeping track of everything, but boy, I mean, those are some big moves, man. Even the pound, it's been a one-way rocket ship since September 23rd, almost, from 126 to 138. And yeah, as you mentioned, the euro, a little bit of different action, but just recently, some big action. What's that day that we made that low? February 5th, you just traded from 119 up to almost 121.2. Let me ask you, Teddy, for those not familiar, I mean, you're on with us every day, every Wednesday at 10:40. I mean, the vast knowledge that you just gave us in 4 or 5 minutes is incredible, man. I know the listeners, we got emails, appreciate it. How did you get into Forex in particular? I know you're in the markets. If you're in Forex, of course you're watching the markets. How did you get into Forex in particular so in depth, the way that you understand things?
Okay, well, that really comes from when I was on the trading floor. When I was in the S&P pit, we used to have the boards all around the trading floor. So no matter what quadrant you were in, you could look up outside the pit and see different markets, And when I was in the S&Ps, my biggest indicator, I mean, this is before Globex first came on, originally it was just the trading floor. Then the electronic markets came on, but they were broken, And then when the FX markets came on, it was the first time where you could trade electronically purely from Sunday night to Friday afternoon. 24 hours a day. No matter what, there was no breaks in it, you know? So that started to draw me in just because of the ability to not have those closes. Like when we used to have the closes on the floor, like I would put on positions, for instance, in the bond pit when there were still the mini bonds, you know, because I knew that the 30-year was closing, but the mini bonds were open for another hour, you know?
Yes.
And then there was the night bonds. So, you know, they'd be closed for a couple hours, then they'd open up at night. So you'd leave from work, go have an early dinner, and then, you know, hopefully make a couple ticks in the night bonds. But usually it wasn't the night bond trade, it was that gap between them, you know. So when as electronic trading came on with futures, you know, it was the liquidity was better with the currencies, you know, and I was a bond trader at first, so I was really apt to following the interest rates and currencies because currencies, interest rates are a function of currencies, you know. And so with knowing that, that started to really get me into watching like the yen and the pound and stuff, and then also watching the other physicals because I was in the commodity business. I started to see how they all kind of played on each other, you know.
It's just so cool, man, because like you talked about, I mean, we're seeing it with I got a real lesson myself with in the last few years of negative interest rates, you know, and the driving currency action and, you know, whether you want to try and hedge something or how negative rates are playing and why are you going negative when the U.S., you know, why are you going negative in like, you know, abroad when the U.S., the strongest economy in the world, man, is giving you 1%, 2% to kick off, you know, 2020, and Forex is driving so much action, man. So listen, we appreciate the education, man. We look forward to it every week, and I appreciate the well wishes, folks. Forex-trading-unlock.com. Check out Teddy over there, and Teddy, we will talk to you another week, man. We'll see where we are, and we appreciate it as always.
Cool. Take care. You have a good one.